Seattle area homeowners, what is going on in the real estate market here in November 2023? Now it's dark, it's rainy, it's cold, it's yucky, and what is happening in real estate? Typically, this time of year is not a great time for the real estate market. We tend to see fewer buyers out when the weather turns dark. They can't go as easily after work in the evenings. And we just kind of hunker down with Thanksgiving and Christmas. I usually say that the Super Bowl is kind of the kickoff for the spring season. So between now and then, we can expect to see the market be a little bit more depressed, which is a typical seasonal fluctuation. However, I did get an article I want to share with you. So I don't know if you can see this headline. One of my clients recently said, or he sent me this in response to my weekly email newsletter, and it's essentially a sky is falling type of headline. So I don't know if you're hearing things in the news that have got you a little bit scared about what's going on in housing and the real estate market, but I wanted to just take you through a little bit of the facts and the details so you can know exactly what is happening and whether or not it's something you need to be worried about. So this is a chart of median home prices in the Seattle area. We've got Seattle and Bellevue on here, and King County and Snohomish County, just to give you an idea for the regional variation. And we are looking at this month by month. It's kind of a jagged line, but just since Bellevue is set apart, it's so much more expensive than everything else. We can look at this line pretty easily. And what we see is that things were going up, up, up. Last spring in 2022, then they cranked the interest rates up so high, the market went down and it softened here. It was soft through December, and then come spring, so this was December of this year, 2023, come spring, the market started to climb again. It climbed until summer. Summer, people go on vacation, things soften up, and it went down. And then in the autumn, as we often do, we got a little bump. So that's where we are right now. This is our last month of data. And I think maybe to just smooth this out and make it a little bit less jaggedy, we'll look at a 3-month rolling average. That makes it a little bit easier to see what's going on. But as you can see, here in Bellevue at the peak, the median home price was 1.56. And this year at the peak, the median home price was 1.5. So we are really not very far off from before. And now in October, the median home price is 1.4, and that's actually up from where we were last October at about 1.3. So if you think the sky is falling, if you think the market is crashing, the data suggests otherwise, which is that we are actually up, as you can see over here in Bellevue, 8% over where we were before. Now, it's not such a rosy picture everywhere. In King County, we're even. You can see the King County line is a lot flatter and a lot lower, but we're even with where we were at this time last year. And in Snohomish County and in Seattle, we're actually down a little bit, but we're down 2%, 3%, which is not, in my view, a major market crash. Most people that I talk to seem to think that with the market performing the way it is, buyers have adjusted to the new normal in terms of what interest rates are looking like, and buyers are still out there. We are really in, reminiscent to what the article, I did read that whole article that I showed you earlier. What they were arguing was that when the baby boomers came of age, there was a lot of demand created by them. So baby boomers were entering the workforce and getting jobs. Baby boomers were buying houses. Baby boomers were having kids. So there was a lot of activity being driven by the baby boomers. And now the millennials, their children are having a similar impact. What I'm seeing is that the millennials are driving home purchasing right now. There are a lot of buyers in the market, and there are, in fact, more buyers than there are houses available. So that's what's keeping the demand high, even though we really are struggling with affordability since prices are high and interest rates are high. There are still enough buyers out there in this area that we haven't seen the big crash. We did go down quite a bit here as everyone was adjusting to the new interest rates, but now interest rates seem to be leveling off around 8%. Eek! Hopefully it won't go up too much further than that. A lot of people think it will go down next year into the sevens or even the sixes. And when that happens, we can expect prices to start climbing again. So let's look at some other data just to give you an idea of what's going on. This is new listings. So how many new homes are coming onto the market? And you can see that this is really a bouncy, up and down, up and down. So the low peak or the low trough tends to be in the New Year's timeframe, that December, Christmas, not very many people listing. And then as we hit the spring, it starts to take off with more homes again. Now this year, you can see our bounce was a lot lower than in previous years. And if you want to, we can expand this out and look at it. So usually, we're between 12,000 and 15,000 new listings in King County. And this year, we were under 10,000. We were between 7,000 and 10,000. So what this is showing us is that we have a contraction in supply. Not very many people are selling their homes because presumably the thinking is that there's this locked in effect. I have a low interest rate on my home right now because I got that 2% refi and I don't want to buy something and move up to an 8% purchase price. What we're actually seeing, or interest rate on the new home. So what we're actually seeing is that a lot of people who are moving either have to move because of family circumstances. They got a new job, they had a baby, they got married, something like that. Or they're older people who have a lot of equity in their home. And so they're selling one home and buying the next home cash. So they're really not affected by interest rates at all. And they can, in fact, take advantage of the softer market. So they're not in a position where they have to compete against everybody. So we are seeing relatively more flexibility in selling and immunity to interest rate concerns in that older demographic that has a lot of equity in their homes. Now let's look at homes for sale. This is telling us essentially how many homes are available for those buyers out there. The smaller the number of homes, the fiercer the competition, and the more likely that prices will get bid up with multiple offers and that type of a thing. What we're seeing right now is that the number of homes for sale has been climbing since the spring. So we are seeing an increase in inventory. And even though people are buying those homes, they're not buying them as quickly as they're coming onto the market. So these are the closed deals. So these are going up, up, up. And now in this late summer and autumn, fewer transactions are taking place. Days on market is a good indicator, again, of how quickly the homes are getting snapped up. You can see that, during those unicorn years, everything was selling really quickly, and then interest rates got cranked up. So people said, I don't know what's going on. They stopped buying, prices changed, everything was wonky for a little while. Starting in the spring, we saw, again, multiple offer situations in the peak of the market. And for the most part, things have been selling in just a week or two on average throughout the year. And this is still indicative of a very strong seller's market. If you can sell your home in a week, you're doing very well. Now, this is median. Let's take a look at average in case that gives us a little different read. So average is a little bit higher. And so what I'm seeing in the field is that people are putting their house on the market either at a good price where it's going to sell in a week. And if they get an offer, they negotiate with that buyer and they get it done. I just had a listing in Marysville that sold within a week. No problem. We got the job done. The other situation is that people are pricing the home too high, or it gets priced high. It doesn't get the activity that they want. And the sellers just stick it out. They're not willing to adjust the price. And those homes are staying on the market longer and eventually either reducing their price or perhaps selling when a lower offer is made. I have a client who's looking in Kirkland. Their home was originally listed for $1.8 million. we just made an offer on a home. So it was originally listed for 1.8, brought down to 1.7, brought down to 1.65, and we made an offer on it for 1.5. I don't know if we'll get it yet. I don't know if we'll meet in the middle or what's going to happen. This is a literally in process deal, but you can see how sellers are having to make adjustments to actually meet this this average. And what is a buyer's market and a seller's market? Typically, they say if it takes 4 to 6 months to sell a home, then that's a balanced market. Longer than 6 months is indicative of a buyer's market. Here in Seattle, we work on a more compressed time schedule. So if it hasn't sold in a week, if it hasn't sold in 2 weeks, that might be an indication that the pricing is off. You're not getting a lot of people through. It's not happening. You might need to make some changes. So that's that's what we're seeing here. More than half of the homes, the median is like if you spread them all out and look at the middle, more than half of the homes are selling in just 10 days or so here. But some of them are selling in a very long time, and that's pulling up these averages. I have another client who has priced their downtown Seattle condo according to comps at a reasonable price, but it hasn't sold and it hasn't sold and it hasn't sold. We've had about 20 people through and we haven't gotten an offer, which is indicative that the market is telling us it's priced higher than what they want to pay. So percent of list price, you can see if people are having to take a big discount on their price. And let's again look at averages. So here, what we're seeing is that on average, people are getting full price offers. Anecdotally, I'm seeing a lot more negotiating on prices. Let's look at percent of the original price. So here we're seeing between 100% and 98%, but this is as a percentage of what it's currently listed for. So what this is telling me is that a lot of buyers are not coming in with lowball offers and getting them accepted. They're waiting for people to drop their price on their listing, and then when it gets to the price they want, then they'll make an offer. I did see over the summer a condo that was originally listed 600,000. They dropped to 575, 550, and eventually sold for 500,000. So they came down off their original price quite a bit. And I know that that's happening more and more in the field. A lot of it depends on the mindset of the seller and what they want to do with their pricing. I think the place people get stuck is when the agent says, this is what your property is worth. We put it on the market and it doesn't get an offer. It doesn't get any activity. Those first week or two are kind of the prime time when everybody who's in the market in that price range is going to come take a look. Everyone that's looking at a $600,000 condo in that neighborhood looked at your place, decided it wasn't worth it. So now you need to either wait for a new crop of buyers, which might be looking, if a typical buyer is looking for about 2 months, then you might have, 50% more buyers the next month, 50% more buyers the next month. But once it's been on the market for a month or two and they said, hey, the last crop of buyers didn't like this for 600. I don't think I like it for 600 either. What's wrong with the property? So it kind of gets a little old on the vine. It makes it feel like people don't really want that property. And so if you don't come out with the right price and get the positive feedback by getting an offer, then you need to adapt pretty quickly, because if it wasn't good for 1 month's crop of buyers, chances are the next month's crop of buyers is going to react in a similar way. It's very hard to find that needle in a haystack unicorn person that after 100 people have looked at it and rejected the property and the price, that one person is going to say yes. At least in the market we're in right now, where prices are not climbing month by month, then we need to be more aggressive about pricing to the market feedback. And here's just another piece of data I like to look at, which is how many showings do we need to have before the property sells? So between 14 and 22 showings is what I'm seeing here. 10 showings in Snohomish. So essentially what this means is if you have had that many people through your property, you should have gotten an offer on average, right? If you've had 10 people through your Snohomish property, chances are someone would have made an offer on it. If they haven't, there might be something wrong with it. I mean, maybe you priced it really low and you got 20 people through your open house on the first weekend. That's great. Let's see one of them make an offer. If you've had 10, 20, 30, 40 people come through, no one's making an offer. Again, that's an indication that you might need to adjust your strategy. Before we wrap this up, I just want to leave you with a little information here. I actually had a buyer asking me this, what about the recession, war, all the bad news? And here's what the correlation is between a recession and home prices. So I will point out that in 2 out of the last 6 recessions, home prices went down, and really they only went down significantly in the 2008 market crash, which is because the poor housing practices are what created the problem in the first place, right? They were giving out all sorts of no document loans to people that couldn't afford the houses. It was a house of cards when everybody's adjustable rate mortgage adjusted up. They couldn't afford their housing payment anymore, and everyone started going into foreclosure, and it was a big mess. So that was kind of an implosion of the housing market itself. In a recession in general, there's not a high correlation toward declining housing prices because, in fact, what they do to fight a recession is to reduce interest rates, and reduced interest rates spur the housing market. So we're in an interesting situation here where we had the whole COVID mess and they reduced those interest rates to unprecedented low levels. So that kind of drove the market up. And now it's returning to normal, and it's essentially looking like pre-pandemic levels. So essentially, the market is not necessarily crashing; it's just renormalizing, and interest rates are now within normal ranges. And the big concern is that we've really affected affordability with the pricing run-up that we've had over the last couple of years, but homeowners got a huge boost in their net worth. So if you owned a property, you had a corresponding increase in your wealth, and you can go into another property with that equity that was created during the run-up. So kind of if you already had your foot in the door, you're riding the wave of appreciation, you stayed at par, you can go into your next property without a problem. The real challenge is for people who did not own a property during that time and are seeing the market run away from them. So their earnings went up a smaller amount than the value of the property. So it's getting increasingly hard to get your foot in the door and buy that first property. So here in Seattle, what affordable housing looks like is essentially condos and townhomes priced between $200,000 and $500,000. That's kind of the starter home. That's how you get the foot in the door, is going with something that might be a little bit smaller than you anticipated to be able to ride that appreciation wave as it continues to happen in the future. And then after 5 or 10 years in that property, hopefully you will have accumulated equity, your earnings will have gone up, and you can roll that into your next home. It's often not until people get into their second or third home that they're able to meet that kind of median for this area priced home of $700,000 or $800,000, which is, the typical 3-bedroom, 2-bath, 2,000 square foot type of property. So I hope that gives you an idea of what's happening. Homeowners are doing very well. If you owned a property, you're continuing to increase your equity over the last couple of years. You have a huge net worth compared to renters, and just a huge boost for anybody that owned property over the last 3 years. Now, if that's not you and you don't own property, I don't want you to feel too badly, but just know that there is an opportunity for you to be on the train when the next big wave comes through. And the key to doing so is getting your foot in the door. Americans still believe that real estate is the road to riches. They think it's a bigger wealth driver than stocks, golds, bonds, cash, or their retirement accounts. And they think that it's still the best long-term investment according to Gallup polls. So this has been the case for the last 11 years, and it seems like most people who have a home are doing very well. So the key is not necessarily timing the market perfectly. I mean, we all wish we could do that, but it's easier said than done. Right now, prices are at fairly low levels for the Seattle area compared to what they have been in the past, and we can expect that they will go up in the future when interest rates go down. So thanks so much for watching. Please like and subscribe. We'll catch you on future videos with future updates. And if you would like to join our email newsletter so you can stay up to date with weekly market trends and area happenings, visit me at homeproassociates.com. Until then, I'll see you on the next video.